from a strategic standpoint, you could argue silver is just as valuable. And maybe that's why you see these eight Western banks that have gone to such great lengths to suppress the paper price. But then again, you're seeing massive deliveries as well on COMEX. And when you see the open interest just fall by 10% yesterday, that signals that typically, to me, that signals that these contracts are getting closed out and are preparing to stand for delivery. So when there is a short, the long on the other side has the ability to stand for delivery. And when you see on the first day like that, it's just massive drop in open interest. That to me are contracts that will stand for delivery. And again, we saw, a huge delivery. What did I say on that number? 14,813 contracts. It's the second highest ever. And if we multiply that times 5,000, well, that's 74 million ounces of silver stood for delivery, just like that. And I think you're going to start to see silver leave the COMEX exchanges as well. And that's when you'll realize that this is getting really serious. But this is a trend that hasn't stopped. We've seen more imports of gold into this country and to a lesser degree silver than at any time since the end of World War II, when everyone sent us their gold because of the Bretton Woods deal. So it's not just gold, it's also silver. And I think the people at the highest levels understand silver. There's a race to secure it, and I think they understand that it is strategic. It's not tier one, so it doesn't have the same implications that gold does for the Basel III regulations. But when you see Russia and India and China and all of these countries on a mad dash for it, I think that people in the United States who are making the policy understand that as well. And that's why you're seeing so much brought into the country from London and from Switzerland. 2,365 billion divided by 261 million ounces, you get $9,044. That is what gold would be today if we backed M1, which is the Federal Reserve notes in circulation. That's the way it was prior to 33. When the dollar was backed by gold, it was M1, notes in circulation. And M2 is credit. It's 92% credit, according to Mike, and it's all the numbers that you see in your bank account. That's just credit. They don't have it at the bank. If you had $5 million in your bank account and went there and demanded it, well, you'd be lucky to get 2% of that, which is interesting. By the way, just noticed a story today. Spain has introduced strict new rules on cash withdrawals. Withdrawals over 3,000 euro require advance notification to the tax agency. Over 100,000, you need 72 hours notice. So, but, getting cash is harder and harder. But anyways, I would sell gold. I mean, it depends on your situation. But look, there aren't very many opportunities where you can get an asset that has this kind of upside potential with such muted downside potential that is being accumulated by, the biggest money in the world. So yeah, I think that if it were me, I would probably sell gold. To me, silver is something that has been frustrating, but you can't run away from mathematics. You can't run away from that kind of logic. The old saying, I keep saying, the market can and will stay irrational longer than you can stay solvent. The people that have been playing this game with the futures market are very powerful. You're talking the biggest banks in the world, probably by direction of the federal government or the military industrial complex. And again, that chart, Ed Steer, you saw that chart that Ed Steer, gold charts are us. Yeah. So, the red line would be the four biggest commercial banks and the green line, the eight largest. So the four is inside of that green. But why would you have silver, this tiny little market, having the largest concentrated short position? I mean, and that's concentration. Look at crude oil, and you see where oil is right now. I mean, why the hell would they do that? At the same time, China, the second largest producer in the world, is flying all around the world buying doré and concentrate. Russia makes a public announcement that they're adding it to their stockpile. India's bought 900 million ounces in the last 5 years. And of course, this is something that's not stopping. And now the United States is importing it. But why would you have eight banks with that kind of a short position? There's something, that's very strategic about it. But that works when you don't have much of the world standing for delivery, and you do now. So that's kind of why I think you're seeing the volatility. That's why you're seeing huge deliveries. That's why you're seeing massive imports, because this is getting real. And you don't want to be on the wrong side of a failure to deliver one of these large banks. I guess we'll have to see. But if it were me, I'd sell gold for that reason. You could argue it's a generational trade. I mean, it's once in a generation trade. And, I hope people take me seriously on that. I mean, there are very few things I've ever seen where I can say to you, well, if all we do is hit 150-year averages, you'll double your money. And, that's something that you don't see very often. I don't know. I would simply say to you, it's as good of a trade as you will ever see in terms of risk versus reward, especially if it's in an IRA, because if it's in an IRA, you're not going to have any tax issues or shipping issues. That would be the way to do it. But yeah, I mean, logic would say absolutely do it. And if all that we see, goes back to 42, 45 to 1, it's a double. It's coming out of the ground at 7 to 1. So, you see it go to 30 to 1, which I think is very possible. You're tripling your gold almost. Anything that you would sell will not trigger dealer reporting unless it can settle a COMEX contract. And it was either 3 kilo bars or a 100-ounce gold bar. We used to have to, if we implement, we haven't done it on the 1-ounce gold bars yet, and I believe we should. We have always been under the assumption, and it's been that way forever, that in gold, if you sell more than 24 Krugerrands or Maple Leafs, or more than 24 ounces worth of Mexican 50 pesos, because they're 1.2 ounce, in one transaction, we're supposed to do a 1099. Or gold bars of any size greater than a kilo. That would trigger reporting. Now, the new COMEX rules, basically, the way that I read it, said that if it can't settle a contract, it's not reportable. That would mean no longer report Krugerrands, no longer report Maple Leafs, no longer report 50 pesos, and no longer report 1-ounce gold bars if you're selling them back in excess of those ounce limits. The only thing that would trigger it on gold would be 3 kilo bars in one transaction, or one 100-ounce gold bar. On silver, we always used to have to do bars or rounds at 1,000 ounces or more, or pre-65 constitutional silver at 1,000 face. When you get to the $1,000 face value mark, you have to report it in one transaction. Now, again, we've already taken out, because of this rule, we don't require it on junk silver anymore, nor do we require it on silver rounds anymore. You can settle a contract with 10-ounce, 100-ounce, kilo, or 1,000-ounce, technically. So in essence, what it really does is it frees up the gold reporting on just about every level. Now, that doesn't mean you don't have to do it, right? Just because we're not going to do a 1099 on your behalf doesn't mean you're not required to do it. It just means that it's the honor system. So be that as it may, you should know what the law is, and we'll show you where the line is. We'll show you how to look over it. If you step over it, that's your choice. We're not going to do the reporting, and most everything you're selling, it looks like, moving forward. This may sound bad, and I don't mean it to sound bad, but I mean it sincerely. Like, if I was sitting at a bar with everyone here having a drink and I were being completely candid, I would say there are more full of crap companies in this industry than there are good ones. And a lot of these companies spew half-truths, myth-truths, but a half-truth is as bad as a lie in many respects when you're talking about, an ounce of gold being over $3,000. Like, there are companies that will try and tell you that a British sovereign is collectible and not reportable. Well, not reportable isn't the right word. They'll tell you that it's collectible because it's pre-33 and safe from confiscation, is what I'm trying to say. But the law says pre-33 U.S. mandated, or U.S. made. So if you're buying numismatic coins, there are companies that will try and sell you British sovereigns and Swiss 20 francs, which are just a few bucks over melt value at huge premiums, and they say it's a collectible. That's a half-truth. Yeah, pre-33, but no, because it's not U.S. made, it is not safe from confiscation in theory. or something like that. Yeah, I was told American Eagles, you don't have to report. No, the dealer doesn't need to report. You do. There are lots of half truths like that. Or used to talk about QSIP numbers or these modern minted numismat. All this stuff is just a bunch of nonsense. So that's why you deal with the 6 or 7 or 8 or 10 companies that have great reputation. And they're easy to find. Just stay away from the ones that are IRA centric. That's the biggest thing of all. They're the ones that are causing the most trouble in this industry. The ones that you go to their website and they're all IRA. Those are the ones that are really, as far as I'm concerned, harming the credibility of this industry. The funds transfer even just a very small portion of their money into the mining shares, which they haven't. They've been largely ignored. And to see mining shares priced where they are, where gold and silver are where they are, it's crazy to me. So yeah, I think that you should. And to me, you envision your finances as a pyramid. The base of your pyramid, 60-70% should be things like paid for real estate, farmland, gold and silver. You could say cash, even though it's a losing proposition. It should be in the base of your pyramid. The middle portion, maybe 20%. 6-month duration treasuries paying 4.5%. Utility stocks paying a dividend. The home run, a top 10, 15% Bitcoin, cryptocurrencies, and mining shares. This is the Swiss philosophy. You can make more on the top 10 or 15% than the bottom 85%, if all goes well. But their theory is you lose every penny you put into the top 10 or 15. You don't even make a nickel, just break even on the middle portion, as long as the base of your pyramid is large enough to keep you from going backwards and it's low growth. And look at gold, it's outperformed everyone's expectations for quite some time now. So yeah, I think you should. Just don't invert your pyramid.